What's up, guys? It's February 7th, 2026. Today's market lesson is so simple, straight to the point. If you're not patient, you're not profitable. Not in this market. Don't be touching buttons. Don't be obsessing over the computer screen when the charts look like this right here. You see what I'm talking about? You guys see the broad market. We're trading below the 50-day moving average. We're putting in these large range, volatile opens and closes. There's no constructive price action. If you're not patient during markets like this, you'll wear out that physical capital, the trading capital that you have in your account. You got to do everything you can to preserve that capital. Hold on to that capital, right? But two, what you're also doing is you're wearing out that mental capital. And when these things do start to construct back up, you won't be in the right headspace to take advantage of it. So take my advice, guys, as somebody that's been around the game 6 years now. I've seen some of the dirtiest markets you can see out there. You know, I've seen some absolute, really rough environments to go in and swing trade in. And heck, I've seen some of the best swing trading environments of all time. Take my advice for it. Stay patient. Here's a little hack that you can apply to really improve your patience during periods like this. Guys, keep in mind that as traders, putting on a trade is similar to a dopamine hit. Not, to the sense of doing a, line of cocaine or, whatever drugs people might associate dopamine with. Not quite that extreme, but very much so. When you are taking a trade and you're watching your account change money. Money's flowing in, money's going out. Either way, that's a dopamine rush that's coming into your brain, and it's affecting your neurons inside your brain. And your brain is, sad as it is, it's addicting. It wants more. That's why people get that fear of missing out. And when the market opens, they want to be hands-on. Take my advice, guys. There's ways that you can outsmart that feeling. I'll tell you one thing I do, because I'll do anything to not lose money in my stock trading account. That's the worst thing that could possibly happen. What that means for me is I can't size into trades that are A+, that are A setups when they do come around. You know what I'm saying? I need all the capital that's around so I can size into it when it does appear for me. So here's what I do. I go and I make other accounts. Shit, and they don't even have to be stock trading accounts. I'll put $50 in a DraftKings, in a golf lineup, in a DraftKings pick six, just for the heck of it, just to risk $50 or $20. If I lose it, that's okay. It doesn't have anything to do with my trading. You can itch that little dopamine itch that you guys want to hit so bad. But really the best way to do is just do nothing. Just don't trade when you see markets like this. SPY, we're trading below the 50-day moving average. Like I said, we're not constructive. QQQ, we're lagging again. We've really kind of failed that 605, 607 level. That was so important in the chart here. And I don't see any reason that this thing can't just head on down and test the 200-day moving average down here at 580 before it gets us a little bit of relief and bounces in the short term. And also looking at the UVXY, the volatility index, guys. If you ever want to look at sort of an inverse SPY QQQ, always go in and look at this UVXY chart. What this represents is the volatility of the market. And a lot of people, a lot of hedge funds, big money managers, they will come in and they will hedge their long positions on UVXY calls. Short term, sometimes even a couple months out. And they're well aware that if QQQ and SPY take a nosedive here, then they're going to see some returns on their hedge plays on UVXY. This is a chart that tried to break through that $42 level today. It really sold off, but it's back at the 50-day moving average. Let's see if the 50-day moving average starts to form a little support here and change direction from moving down to potentially starting to shape back up here and change trend. That's a chart that I'm keeping an eye on day to day. The only swing trading chart that I'm even keeping in my sights, guys, I wouldn't even say it's in my sights. I'd say it's in my peripherals. Like I've got an eye on it. but I'm definitely not locked in, needing to be taking action right away. NBIS did pop up above the 50-day moving average. It's had some pretty strong candles off that 200-day. It looks like that there's some, some chasing in this name. Will the chasing get punished? In this market, it's very realistic to see that happening. But if this market can kind of bounce, I see relative strength here. And I see key levels of 100, 105, 110, and then all the way up to 120. The same levels we talked about last month when this thing was trading right in here. I'm patient. I'd like to see a couple small range candles here on the 50-day moving average before we start to shape up to that $100 level and go for that break of 100 to 110 and capture a nice little move on NBIS. But again, not actionable. With the state of the broad market, this is simply a trade idea, not an actionable one. Moving on, the Forex markets. Here's another hack that you guys can really start to apply when the swing trading markets are so dead. Just put you some money in a funded account. Spend $40 on a Apex account and day trade the day trading strategies that I like to trade. Come in here and join me guys on a live stream, guys. I have been making money trading this IFVG strategy. What the heck? Why can't I? This IFVG strategy, here's what I'm talking about, guys. I've covered it in multiple videos before. But I pick up these funded accounts. Let's see if I can log in here and kind of show you guys where I'm at. Come on, man. Yeah, I do have another tab open. Damn, guys, I'm way behind today. Okay. We've got another tab opened up here. We've already got our accounts. So I've got 4 Apex accounts going right now. These all started at 50K. We've got one of the fundeds up to 50,980. We've got one of the fundeds up to 50,292. And we've got another funded up to 50,637. The live account that I haven't taken a single trade on. Very patient with it. It's not something that incentivizes you to, rush into any type of trades on. But today I actually took a short position about, this first macro window here at 840. I took a short here on this 2-minute inversion. It was a clean one, guys. And basically what I'm doing here is my strategy. I look for a fair value gap to form, like we had right here. I could replay it for you. I look for a fair value gap to form in the chart. And I look for this fair value gap to form after some form of liquidity sweep, which means we just ran past a couple of highs. That some people, not the smart people, the retail traders would call that support, right? So get you guys a big view here of this chart. So retail traders come into this and they see, oh, support, my goodness. Support, shit, we have to deny off of support because it turns resistance. We now call this resistance, okay? And then they see, oh, we pushed through it. We created a fair value gap. I'm going to buy the market because resistance now turns to support, right? And the market's going to love that support line. It's going to bounce up and move higher. I see that fair value gap and I take note of it, but I don't buy the market. Hell no, guys. Fuck that. I'm not buying on a break of resistance turn support. What the fuck do I look like? All right. I like the way that we pushed up higher here. I also like the way we delivered from a higher time frame fair value gap on the chart, which is this right here. This is a higher time frame gap. It's really clear here on the 10-minute chart. Or no, the 5-minute was what it was. Yeah, I mean, it's multiple time frames. You'll get better at picking these up with the naked eye. I can see it that there's a gap in there, and we delivered out of it. However small it might have been, whatever time frame it was, we did deliver out of a previous gap here to the left, and that adds to the confluence for me. We delivered out of this gap, we pushed higher, and then what I wait for is for us to inverse the gap. Like we did right here, you guys. I'll play the price. All right. We couldn't push higher. We pushed down, and then boom. I'm entering. And really, I made all my money on this one candle right here. Was plenty of money enough for me to just exit out of my trade and take a winner on the day. Because we had an inverse fair value gap. This bullish gap turned into a bearish one. And we can go ahead and just target the lows. And you can see here, price actually moved all the way clear to the lows. And took out low a day in just a few minutes. I wasn't patient enough to capture that whole move, but quite frankly, I don't really give a shit. I don't give a shit when I'm, loaded up in a position, and I capture, 15 points in NQ. Like, fuck, dude, I don't need any more than that. That's fine. So that's what I'm doing when I'm trading these funded accounts, and I'm not going to be posting too many of these videos on YouTube anymore, guys. These are strictly for the group chat in there. And when swings start to get hot, you're going to want to be locked in on the Discord, because we're going to have some swing trades set up, guys. I don't know when it's going to be. It could be next week. It could be next month. It could be fucking in the summer. I don't know when that time is, but we're patient until then. We'll make our money out of the futures markets. And stay patient in the meantime, because like I said, if you're not patient, you will not be profitable in this market. Have a great evening, guys. I'll talk to you soon.